Welcome back. Today we are diving into one of the most important foundations of accounting: single entry versus double entry system. By the end of this video, you will understand what each system means, how they work, their features, their advantages and limitations, practical examples, and how to choose the right method. Let's begin. What is single entry system? Single entry system is the oldest and simplest form of bookkeeping. It is usually followed by small shops, traders, and small-scale businesses who do not have the time or expertise to maintain full books. Definition: single entry system is a method where only one aspect of a transaction is recorded, usually related to cash and personal accounts, while other accounts are ignored. How it works: a business may record cash received, cash paid, money received from customers, money paid to suppliers, some expenses. But it does not record all business activities in a complete accounting format. Example: if a shopkeeper buys chairs for the shop for Rs 5,000, single entry record might be paid Rs 5,000 for chairs. No double effect, no asset record. Features of single entry: incomplete system, no standard rules, does not follow the double entry principle, no proper trial balance, only partial records are maintained. Very flexible and informal. Advantages of single entry system: easy to maintain, less time consuming, suitable for very small businesses, requires no special accounting knowledge. Disadvantages of single entry system: incomplete and unscientific, no accuracy check, no trial balance, hard to detect fraud or errors, cannot calculate true profit, cannot prepare a complete balance sheet, not suitable for growing businesses. What is double entry system? Now let's discuss the most important and universally used system, the double entry system. Definition: double entry system is a method where every transaction has two equal and opposite effects, one debit and one credit. For personal accounts, debit the receiver, credit the giver. For real accounts, debit what comes in, credit what goes out, and for nominal accounts, debit all expenses and losses, credit all incomes and gains. How it works: whenever something comes into the business, debit. Whenever something goes out, credit. This system treats the business as a separate entity, so every movement of money or value is recorded. Example: business buys furniture for Rs 5,000. Double entry: furniture account debit Rs 5,000. To cash account Rs 5,000. Here, furniture increased, so debited. Cash decreased, so credited. Features of double entry system: every transaction has two aspects, debit and credit. Follows scientific and systematic rules. Provides a complete record of all transactions. Helps prepare a trial balance for accuracy check. Enables preparation of full financial statements. Helps detect and prevent errors. Shows true profit or loss of the business. Shows financial position through assets, liabilities, and capital. Universally accepted and used globally. Provides reliable information for decision-making. Advantages of double entry system: provides complete and accurate records. Helps detect errors through trial balance. Shows true profit or loss of the business. Shows financial position through the balance sheet. Universally accepted and useful for decision-making. Disadvantages of double entry system: more time-consuming to maintain. Requires trained and skilled staff. Involves higher cost of maintenance. Not suitable for very small businesses. Complex for beginners to understand. Practical comparison of single entry system and double entry system. 1. Completeness. Single entry records only partial information, usually just cash and a few personal accounts. Many important details like assets, liabilities, and expenses remain unrecorded. Double entry records every transaction with two-sided entries, debit and credit, giving a complete and systematic record of all financial activities. 2. Accuracy. Single entry. Because only partial information is recorded, mistakes can easily go unnoticed. You cannot cross-check totals. Double entry. Highly accurate because debits must always equal credits. Errors can be traced and corrected through trial balance. 3. Profit calculation. Single entry. Profit is determined roughly using assumptions or comparing capital difference. Not fully reliable. Double entry gives the exact net profit or loss because all incomes and expenses are recorded properly in nominal accounts. 4. Financial position. Single entry. A proper balance sheet cannot be prepared since assets and liabilities are not fully recorded. Double entry provides a complete financial picture, allowing easy preparation of balance sheet showing assets, liabilities, and capital. 5. Suitability. Single entry. Suitable for very small shops, petty traders, and micro businesses with simple transactions. Double entry. Suitable for all modern businesses, firms, companies, and organizations with large or complex transactions. 6. Legal requirements. Many countries legally require companies and registered firms to maintain proper double entry books. Single entry is not accepted for audit, taxation, banking requirements, or legal compliance for medium or large businesses. Real-world example comparison. Transaction. Business pays Rs 2000 for electricity. Single entry. Only this may be recorded. Electricity bill paid Rs 2000. Missing information. What account increased? What asset decreased? Is it an expense? Double entry. Electricity expense account debit Rs 2000. To cash account Rs 2000. Meaning, expense increased, so debited. Cash decreased, so credited. This gives complete clarity. Which system should you use? If you are running a small petty shop where you only want to know cash in hand, amount due, and basic expenses, single entry might be enough. But if you want to know actual profit, assets and liabilities, business performance, financial health, accuracy, compliance, then double entry is the only correct choice. Final summary. Let's keep it simple. Single entry means basic, incomplete, traditional method of bookkeeping. Double entry means complete, scientific, globally accepted method of bookkeeping. For any business that aims to grow or be audited, double entry system is mandatory and highly beneficial.